Well, wasn't that wonderful? It looks like we're back, folks. Going after Chris. No pressure here, folks, in the roundtable. But seriously, that was fantastic. I have had the privilege of hearing Chris speak a few times, and his speeches always resonate with me as a former IT leader myself. That said, we are at the roundtable where we'll get a chance to hear from a few well-known venture firms in the industry, and hopefully we'll leave here with a bit of interesting insight into current happenings in the venture world. I would like to introduce our panel. So first off, we do have from Battery Ventures, we've got Scott Goering. From Sapphire Ventures, we have Shruti Tournatory. And unfortunately, our .72 venture candidate, Johanan Ottensosser, was unable to attend due to an emergency, but he is all right. But I did want to say shout out to him for at least getting this going. But that said, intros here. Battery is a nearly 40-year-old firm with investments into hundreds of companies. A few notable exits of theirs, you may have heard of a few of these: App Dynamics, Coinbase, Splunk, Nutanix. Level AI is in today's CX track. They're not an exit yet, but they were funded by Battery as well. Anyway, Scott, you want to give a brief intro?
Yeah, absolutely. Thanks, Travis, for having us, and appreciate the chance to share some of our current thinking on the VC market. Just a quick background on me. Been in venture for right around 12 years, engineer by training, spent some time at Intel Capital, and now at Battery Ventures for the last 7 years. At Battery, we invest across really North America, Europe, and Israel, thinking largely about enterprise IT and B2B software.
All right. Well, we've got Sapphire here as well. Sapphire's portfolio spans 10 countries. They've got a lengthy list of over 75 exits, including DocuSign, Sumo Logic, LinkedIn, and Square. I'm pretty sure you've heard of most of those folks. Shruti, why don't you give us a brief intro?
Absolutely. And thank you, Travis and Mark and the EVOTEK team for having me today and for hosting these forums for the broader tech community. Always a pleasure. Sapphire, of course, is a global venture capital firm that invests across stages. So we invest in startups from the Series B through pre-IPO stage, typically investing in companies that already have some product market fit, have some initial foundational revenues, and are looking for growth capital to get to the next stage and beyond. We manage a little over 10 billion in capital. So that is capital that we are responsible for investing into high growth startups and emerging technology companies. And again, our focus has primarily been on enterprise technologies, B2B SaaS, and that's where our sweet spot has really landed. In terms of my background, I've had the privilege and pleasure of being in the venture space and at Sapphire for over 8 years, and time does fly when you're working in such a dynamic and fun industry. Prior to Sapphire, I primarily had a career in enterprise software. I spent several years at companies such as SAP and Salesforce.com in strategy and product leadership roles. And before that, I started out my career as an industry analyst at IDC. Yeah, I look forward to the conversation today.
Wow. Well, as mentioned, our candidate from .72 was unable to join, but I did at least want to give them a shout out. Their firm they're part of the venture arm of a $40 billion .72 hedge fund. They've got 85 investments into numerous enterprise, fintech, and deep tech companies. And they have exits including Datalog, DeepScale, and Cloud9. It is a bummer that they won't be here today, although I did get a few answers from Johanan. Maybe we'll throw some of those in there. Lastly, myself, my name is Travis Harrell. I am the principal research engineer here at EVOTEK Labs. I've got a lengthy history in all things IT and tech, but today I'm your moderator. So let's get going here. You guys ready?
Perfect. Let's go.
All right. Well, here's our questions. We're going to start with Shruti, and I'll try to switch this up a bit so you guys all have an opportunity to answer things in a different order here. But Shruti, I see here that you lead Sapphire's CXO network. I would really love to understand what that network is all about.
Absolutely. So in the last several years, I'd say that the venture capital community has increasingly realized that above and beyond staying close to the startup ecosystem, and really building inroads there, that engaging with digital and IT leaders and really change makers across all levels in the global 2000 ranks is really valuable for us as an industry and individually for our firms as well. And it was for that reason that several years ago, we decided to start very, very consciously building out a global network of C-level digital leaders, let's call them CIOs, CTOs, CDOs, and other executives that were proactively really just motivated to push the envelope, to see what's around the corner, and to specifically collaborate with venture capital firms to figure out what is signal from noise in the startup ecosystem, which emerging technologies have legs and are worth betting on, which ones aren't, and so forth. And with that with that backdrop, Sapphire, among many other VC firms of a similar mindset, have cultivated this community. In our case at Sapphire, in response to your question, Travis, we have a community of several hundred C-suite leaders who really just look to us as thought partners in figuring out how they can make better bets for their own enterprise IT strategies. And for us, collaboration with enterprise CIOs and CXOs at companies ranging from Walmart to Bank of America to Pearson to PepsiCo and beyond means that on our end, we as a venture investment firm can tap them for insights on adoption of emerging technologies before we actually put dollars to work as VCs. So when a space is early on in its evolution, it is very useful for us to be able to tap into the spending intentions and the inclinations of IT leaders to really figure out where they're thinking of adopting technologies, where they aren't, and sort of really how that appetite in the market is shaping up. And then, of course, the other thing we can do is really broker meaningful connections between our portfolio companies and that CXO network. We make well over 500 targeted just introductions and host probably over 100 executive briefings a year with Global 2000 leaders to really get a lot of brokered interaction taking place in the ecosystem. And last but not the least, we like to also tap into just the insights that are latent within this network and actually quantify and publish those for the benefit of the broader industry. So we also annually publish something that we call the CIO Innovation Index, which maybe we'll touch on a little later, which is really a benchmark of us polling the IT leaders in our ecosystem and quantifying the state of startup adoption within their enterprises and really trying to articulate best practices for the community as we try and figure out what are the best playbooks for startups, VCs, to collaborate for joint impact. So that's how we think about this network, and it's really grown into a very, very symbiotic community that we greatly value.
Wow, that sounds like a fantastic network. I'd love to be a part of that if I was a CXO of some sort. You know, you mentioned this CIO Innovation Index in your answer. Can you dive in a tiny bit more to what that really means? How do you quantify that?
Yeah. So the Innovation Index sort of germinated a few years ago, coming out of this sense that we had that a lot of venture investors like us were starting to play an active role in brokering sort of thoughtful connections between startups and CXOs and CIOs and large enterprises, but that the insights that a lot of the CIOs and the CXOs in these networks really had weren't being articulated and surfaced sufficiently to the network. And so what I mean by that is, you know, if you look at any global research firm, you look at Gartner, IDC, Forrester, there is quality research out there that talks about how the IT strategies in general of CIOs at large enterprises are evolving. But when we tried to hone in specifically on what the state of startup adoption was, specifically within large enterprises, there was a complete vacuum of data. There was no data quantifying, the top challenges and sort of the top success drivers of how startups can be adopted at scale at a Fortune 500 company. There were no benchmarks around what percentage of an IT budget at a typical organization is being dedicated to startup technology versus large technology from larger incumbents and industry behemoths. There wasn't really interesting data or sufficient data in terms of how much spend, let's say, on AI was going to startups versus the bigger players out there. And we thought it would be a fun exercise to do. And it would be really a resource that could be a benchmarking tool for a lot of the CIOs in our network, but also a tool for a lot of the startups that we work with, that we invest in, that we try and mentor in terms of figuring out how they should really navigate within a large enterprise. So that was sort of the thinking behind it. And every year we pull over 100 CXOs in our network, and it's been fascinating to see that evolve over time.
Wow. Oh, thank you so much, Shruti. That's really interesting insight. Scott, I don't want to leave you out of this discussion, that's for sure. I'm curious, Shruti was mentioning how this index is formulated. I'm curious, what do you see in the next 12 months in CXO spending strategies, both in, I would say, tech spend and headcount?
Yeah, first, let me start off. I couldn't agree more with Shruti and her point that this connection between practitioner in a technology development organization is so important to the venture ecosystem. And I think what she said was just spot on. Similarly, one of the questions that we get, from founders, but as well as industry executives within IT was what's happening with tech spend, especially as the economics, seem to be hitting the skids. And so we recently did a survey of 100 C-level technology buyers just to find out what the temperature was in the room. And I thought it was really, really an interesting outcome. As we think about sort of the next 12, 24 months. A little of the data, 84% of the folks that responded said that technology budgets remain either steady or up. Well, only I think it's sub 20% were cutting budgets. And that's both in terms of spend for technology products, but that was also the case for hiring. So 43% of the folks in the survey responded that they're actually accelerating hiring across their technology organization. Well, only 18% said we're looking at layoffs or reducing staff in some fashion. As you look further out in the data, past that sort of 12-month mark, it's actually better. 2 years, 5 years out, you're really seeing people wanting to accelerate the use of data, the security posture of their organization. So, over 80% in a number of buckets were saying, the 2-year and 5-year time frame, they see these budgets only increasing.
It's a bit of a surprise, I think, probably to some of this audience, and actually great news for probably most of the attendees.
Well, I think a key point is that software tends to be deflationary, right? So you're using this to take other cost out of the business or to grow your business via a digital product or something like that. So, it is a shift in budget away from maybe some of your higher OpEx things. But I think there's solid reasons for people to continue to invest in technology.
Well, interestingly, that kind of pivots into a question that I had. I was curious to hear from both of you on this one. What IT skill sets do you anticipate will be most in demand during this next 12 to 24 months? As you mentioned, Scott, it sounds like there's a shift. So what sort of skill sets will be in demand? Shruti, would you like to take this one first?
Sure, happy to. And by the way, thank you for sharing some of that data, Scott. We haven't run our sort of the final numbers on our 2022 index yet. So I've actually been getting this question and been pondering the same question, and it's really encouraging to hear that the numbers are what they are, and it just shows you like the resilience of just the technology charter and the digital charter that companies have. I remember when we did the innovation index study in like the summer of 2020, the sort of the depth of COVID, I was expecting like just a horror story to come back in terms of the numbers, and it was the same thing. It's like, yeah, things are blowing up, but we're gonna maintain or increase or slightly increase our technology budget. So I'm really encouraged to hear that, that's what the battery network has been saying as well. In terms of the skill sets that I think will continue to just come at a real premium, and that CIOs will have to work very, very hard, to make sure they are acquiring and retaining within their organizations, is data. Everything around sort of the data infrastructure. I mean, data is the new gold, the new oil. You can sort of, use the expression you want, but the skills around managing and transforming and leveraging data are really key. I mean, obviously there was a mad rush for hiring the best, data scientists, and then like upskilling like experienced data analysts into data scientists several years ago, right? And then of course, digital platforms have come in as well to automate the work of data scientists and make up for some of that skills shortage. But really, a lot of the skill sets, around just making sure that the data transformation that is needed to literally like move data from hybrid or on-premise environments into the cloud, to evolve a company's data warehouse strategy into maybe more of a data lake strategy, et cetera, is huge. So the ecosystem around sort of the open data ecosystem is really one that still needs a lot of growth and a lot of skill sets. And again, that critical combination of both IT and business skill sets overseeing that whole shift. Cloud transformation is key as well. So I think, skills around cloud management and cloud transformation are key. And then cybersecurity and the threat landscape just continues to be the gift that that keeps on giving, in the sense that, the threat landscape is never quiet. And I'd say just obviously, CISOs are key hires for CIOs as well. That there was kind of a shortage for strategic CISOs for a while. So I'd say, the making sure that the ranks of leadership, 1 or 2 levels beneath the CISO as well, is something that CIOs are working very hard to do, to make sure they have the right bench of talent. So those are some things that come to mind.
Wow, those are all pretty challenging hires, I would say. As a data geek myself, I've been loving this data resurgence. I like what you mentioned about data is the new oil. I actually saw a term recently, data is not the new oil, it's the new soil. And I really liked how that resonated. In fact, so much that we put it in our recent lab report. Anyway, enough about that. Scott, I'm curious, feel free to piggyback on anything that Shruti said, or if you have completely differing opinions as well, what do you think?
Yeah, absolutely. We are seeing very similar things. I sort of call them the plumbers of technology, if you will. These are the people hooking up the source to destination. They're hooking up the CI/CD pipeline. They're the security engineers. Those folks are becoming increasingly important. In fact, I was just at a city event earlier this week in New York, and one of their executives was pointing out, like, we don't have enough engineers to just do everything. We need the automation. We need the pipelines and CI/CD built up. We need to, be able to know our data is getting from wherever it is on the edge or, on the core into these data platforms. How do we think about data quality? How do we think about model quality? All of those things are super important. And it's not necessarily, for example, where a data scientist is spending time today. They're building models. They're starting to operationalize those models. But really, it's that layer of what I say, and it's not pejorative, but the plumbers of the technology that connect everything together.
Hey, plumbers are super important. What would we do without them? Well, that's great, Scott. I think it'd be interesting to switch gears a little bit. I'm curious, this is just one of those odd ones I was thinking about recently. Silicon Valley, Scott, this one's kind of targeted to you, but it's been a hot trend for a long time, right? Silicon Valley is the hotbed of innovation. And then we've got pop-ups in New York and London and Boston and a ton in Tel Aviv. Just curious, are there any hot spots worth mentioning outside of these areas? And if so, what do you suppose makes those areas hotspots? What are the factors that contribute to that?
Yeah, so we're a Boston-based firm. I happen to be sitting in our Menlo Park office today. Clearly the Valley continues to be a hotbed. We see like a third of our dollars roughly, flowing into this space. And of course, Israel as well continues, particularly around security, but really more broadly to show innovation. However, I would say technology is really, you can find interesting startups and ideas and founders anywhere. We've had great success investing in places like Indianapolis and Chicago, Belgium, France, UK, right? So you're seeing great technologists come out of a lot of different places. And I think there's a couple of key things. One is the ecosystem that people are building in different like geographies, right? Having former founders, having an investment, landscape that can help people grow from an early stage is so important. But the other thing I would say is there's been a shift too, whereas historically, let's take fintech for example. 5 years ago, it seemed to be the concept of find the best product manager at Facebook and the best engineer at Google and slam them together and say, we're going to go take on the banks, or we're going to go take on healthcare, we're going to go fix insurance, whatever it was. There's really been a rethinking, I think, in terms of finding people with domain expertise and then finding the technology skill sets to bring into the company. And so as you think about that, now you start thinking about where those landscapes happen to be. Atlanta, great payment ecosystem, a lot of knowledge there about it. That they can hit the ground running and they can bring in the technologists to solve things. So I think going forward, you're going to just see more and more spread of where venture money is going, where startups are being created. And I think that's great for everybody here.
Yeah, well, especially folks in Indianapolis, right? That's great. Shruti, and by the way, feel free as I'm asking these next questions, if you feel like, hey, I really want to dive into that topic that Scott was talking on, feel free. But the question I had for you was about your catchphrase at Sapphire. Honestly, I was looking this up and it says investing in companies of consequence. And I would love to know what that means.
Yeah, no, thanks for calling that out, and happy to briefly talk about it. Look, venture is essentially about taking capital and responsibly investing it into disruptive emerging technologies and companies that are poised to have disproportionate growth and a disproportionate impact on the world. Our sort of mission and ethos at Sapphire, what sort of gets us up in the morning, sort of excited and charged, is really this belief that we are really here to not only return capital for our investors and our limited partners to multiply the money that we are putting to work, but to consciously and thoughtfully put it behind companies that are really going to either reinvent existing categories of technology and industry in a very compelling and positively impactful way, or that are going to create entirely new categories of technology and just areas of impact that will have a lasting change and a lasting sort of shift in the world around us. And we've been privileged, to have funded a lot of companies that we genuinely believe were companies of that scale and magnitude of consequence, whether it is, LinkedIn, which changed how people approached networking and talent engagement, to DocuSign, which has, changed entire facets of global commerce, all the way through to sort of fintech companies such as Square. And I'm sure, Scott and Battery have kind of partaken in many consequential names and stories as well. But it's really about companies that are there to completely disrupt in a positive way an existing category, or to entirely create from the ground up a whole new service, offering, experience, or product for the world, for various industries that did not exist before. So that's how we think about it. And of course, we are here to make money, but we also try and back companies that we think will leave a lasting and just really meaningful change.
Yeah, well, I would definitely say LinkedIn is, as you mentioned, I mean, goodness, I don't think any of us would really even be in this session without LinkedIn. It's all about that networking, and it's interesting to hear. Thank you for that, Shruti. I have one for both of you, and this is a little bit more controversial. It's, you guys have been in the venture world for a while, and you've obviously made a lot of smart decisions and investments, as otherwise you wouldn't be here. But are there any memorable companies or technologies that you initially overlooked that, maybe later you kind of kicked yourself and said, dang it, I really wish we had kind of seen the light at the time? Scott?
Yeah, of course, right. Venture, like you can't hit 100%. And there's always companies you wish, you were in, right? They're so obvious now, right? There's companies like Snowflake or HashiCorp that have just gone on to do great things. And it wasn't obvious at the time. The flip side is we put some money into Databricks in sort of that same sphere as Snowflake, and it continues to do super well. Would we, looking back, love to put more in? Sure. That's the trick of venture is not necessarily getting all of the companies that you see correctly, but it's getting a combination of companies that match up to our thematics, founders that we want to work with for the next 5, 7, 10 years. And also places where we can add value. And so for us, that open source to cloud sort of journey is something that we spend a lot of time thinking about. So if you look at the examples I gave, it's sort of logical why we landed on maybe one versus the other at the time.
Yeah, interesting. Curious, Shruti, any touchy ones for you, or even just concepts?
Yeah. There's an expression, there's a word for this in venture. It's called the anti-portfolio. And in fact, I want to say it's Bessemer, maybe one of the other sort of very established VCs in our industry that I think puts out like an annual or some periodic like anti-portfolio report. And it's really all about honoring the companies you passed on, that you said no to, that went on to become, just incredible companies and stories. I'd say from our vantage point, it's also interesting to think about companies where you said no a couple of times before you said yes. And, when I think about companies like Box, that's actually a great example. And Aaron Levy has given us like publicly he's given us grief about this for saying no a couple of times before we said yes. And I'm glad that we finally said yes. And I think it's a testament to kind of the sustained relationship building and the focus that VCs really have on building relationships with entrepreneurs in the beginning, maybe not putting money right away. And we in particular are slightly later stage investors, but really making sure that there's an honest conversation going on about the kinds of milestones that a given company needs to hit before that mutual conviction is there that a given investment at a given price point at a given valuation really makes sense. And a big part of sort of being able to say no a couple of times to an investor, but then still having the chance to say yes later on, is really in building a value-driven, authentic relationship where you are mentoring, advising, and helping a company along the way. And then finally, when the time is right, in your viewpoint, to take that step, that patience and that respect is there. So yeah, it's always fun to think about the anti-portfolio. Sometimes it's painful, of course. But yeah, it's always, I think it's a very intellectually honest and I think humbling exercise that all VCs should probably do, to look at the ones you said yes to, but also some of the ones you didn't.
That's great. Those are some interesting insight there. So switching gears again, I've got something, as we were talking about some stuff earlier about fintech, Scott, you mentioned a few fintech technologies, and I know it's kind of a specialty for your firm. I'm curious, there's been a massive evolution I've seen in fintech in the last, 5 to 8 years. And in fact, I just came from the banking industry before I headed over to EVOTEK. So I saw some of this firsthand. I'm curious, where do you see the future headed? I don't know if you have a 12-month or 24-month, whatever it may be, crystal ball, but what do you see as the future of fintech?
Yeah. So we invest in vertical market software fairly broadly. That could be travel and hospitality. That could be a bunch of different things. But fintech is one that we've done quite a bit of investing in over the time. Like I alluded to earlier, like that model has changed. So we've had really 4 core thesis areas over the last 3 decades. Actually, our first fintech investment was selling into banks in 1986, to give it some perspective. And that really led off with our picks and shovels, where like, how do you run your bank better? And we're seeing a lot of innovation starting to happen here, whether it's compliance and regulatory, whether it's open banking, and I think we're getting to this interesting point. It's not going to be a 12-month or a 24-month journey, but it's going to be a 5-year, maybe 5-year plus journey as banks are really starting to think about replatforming all the way down to their core processing system. And so I think that's an exciting trend. I think that not only opens up some opportunity for cloud-based cores, but I think it opens up a ton of opportunity for where innovation is now going to run on top of those new API-first, cloud-centric platforms. And then the last area where we're seeing a ton of interest is in what's been coined embedded finance. Maybe the best way to illustrate what I mean by that is just mention a particular model. For example, we're investors in an insurance company that sells to small and medium businesses. Traditionally, your model is there's a broker, there's a website, you go and fill out the form. Say you're a construction person, you get you do an insurance product for that particular job. Now, this company is embedding that in the workflow of checkout in non-traditional financial places. So contractor goes to Home Depot, on their checkout, what they find is the opportunity to do a per job insurance product while they're buying the supplies for that job. And so you're starting to see all these like interesting, whether it's the rental market, insurance market, there's all sorts of interesting places where traditional banking or insurance products are popping up in non-traditional locations, and that's a huge business opportunity.
That's different. I never would have thought at Home Depot, other than running into folks that don't seem to know where things are in the store, that I would be able to buy an insurance policy on something.
They happen to have a great app, by the way, guide you through the store. So next time you're there, check it out.
Okay, good to know. So on the topic of change, Shruti, I've got one for you here. 2020 we don't want to talk about it, of course, but it did spur a massive shift in how and where people work. I know that in the last couple of years, there's been a bit of reversion to the old methods, and then there's also doubling down on remote. Do you see, where do you see the future of work?
Yeah, I mean, I see these shifts from sort of a couple of levels. One is sort of how the startup ecosystem operates, and obviously, the other lens is the lens of a lot of our colleagues in the large enterprise ecosystem. But I would say that the shift to at least hybrid, if not fully remote work, the shift to hybrid workforces and virtual work it's a sustained trend. It is here to stay in a very measured way. And it's actually going back to some of the trends that Scott was commenting on earlier when you were, I think, asking about the hotbeds of sort of just startup and venture activity that have bubbled up above and beyond kind of Silicon Valley, New York, et cetera. And we certainly see that within our portfolio companies as well. I mean, as recently as probably 4 years ago, probably 80+% of our workforce of our portfolio was Bay Area based and very co-located. Like you had to be co-located most of the time. And today, less than half of our portfolio companies are headquartered in the Bay Area. An increasing number of them are going for distributed hybrid and remote work strategies. And we see kind of similar trends in the larger enterprise ecosystem as well, at least through the lens of our CIO CXO network. And hybrid work is increasingly what workers both in the startup and the enterprise ecosystem are expecting. And what's also happened is that there is a whole crop of just startups that have built the sort of digital tooling, right? Whether it is the collaboration tools, the digital whiteboarding, other kinds of just platforms and novel approaches to workforce tooling that have really allowed enterprises to make that shift in a positive and effective way. And then lastly, employers are seeking to attract global talent via hybrid strategies as well. So I definitely see it as a shift that is it's here to stay.
Well, that's great news for those of us that appreciate the flexibility. And obviously, we're all remote today for this conference. Not that I wouldn't love to see everybody face to face. So, Scott, again, feel free to touch on any of that if you'd like.
No, we're seeing a lot of the same trends. If you would have gone back 5-6 years ago, I think that's the first time we invested in a fully distributed company. And one of our big questions was, if it ends up in an M&A transaction, will large companies be able to get their mind around what am I buying? There is no office to show up in and close a deal. But I think everyone's moved beyond that, and it's the tools, as Shruti said, are being built, and it's here to stay.
Well, that's great. I did want to be cognizant of time here. We're coming closer to the end, and I've got a few more questions, but I also see a few folks have thrown some things in the chat, and I don't want to leave them out. I'm curious. Don Morgan asks, how do your firms balance demand for return and the resulting push toward larger growth investments and the goal of finding true ventures earlier in the process? Does that resonate with either of you or both of you?
Yeah, great question. Funds have gotten larger and larger. I can't speak for all firms. I think we've been on that path for sure. It does end up requiring you allocate more dollars to grow companies earlier. The markets, we'll see how this sort of trend ends up. I think in the next 1 or 2 years, as sort of public comps come down. But I think for us, it's remaining thematic. Maybe it's expanding our thematics. And we're also getting to a world where 10 years ago, if you were, the top 1, 2, or 3 provider of a technology, that was a good exit. You could do very well as a venture firm. Going forward, it feels more and more like the vast majority of the economics end up at the top sort of one, maybe two companies in a space. And so that does make us like reevaluate when we're entering a company. Are they that number one in a space? Because if not, we may be conflicted out of the best opportunity.
Interesting. Shruti, how about you?
No, I think I agree with everything that Scott said. It has been changing times for our industry for sure, and many of us in the venture space have to think about putting more wood behind fewer arrows sometimes. And yeah, I mean, there's a lot of shakeouts that happen in recessionary economic cycles, and it really is. It does become, much more of a winner takes most game in these kinds of environments. So we have to definitely keep a keen eye for that.
Great. Well, I really want to thank both of you, especially for showing up, and being able to take these topics on. They're very challenging questions to some, and I really, really love hearing your insight on this stuff, and I hope the audience got something out of it as well. Again, big shout out to Scott Goering at Battery, and Shruti Tournatory at Sapphire. Obviously, you guys can look them up on LinkedIn if you want to know more about them. But all right, thank you very much.
Thanks so much for having us.
Thank you, Travis. It was a pleasure.